and we are recording. And what I wanted to do, so I wanted to go over some of the, hey Dave, I want to go over some of the earning stocks and kind of review either the trades we made or the trades we could have and should have made, and the trades that we didn't make, and the good parts and bad parts of each of those. And I'll stop the recording. I'll ask for any questions that you might have, and then I'll stop the recording, and then I'll post both of those up to the YouTube channel today. All right, let us start with looking at the markets. Well, let's go ahead and look at this on a daily basis. Yeah, come on there, baby. There we go. We tried to rally and we pulled back. As long as we rally up tomorrow, maybe even close the business today, the 2680 or something like that today. My stochastics RSI says we were supposed to go higher. So as long as we can kind of rally up a little bit, maybe even on say the hourly chart. There you go. There's the hourly chart. We're in the process of trying to form a bottom. Bottoming is a process, especially when you've had so much damage done. Down's 32 now. Same kind of pattern. Stochastics RSI looks like it wants to go up, but we'll see. Nasdaq's another beast altogether. Really looking weak, and probably the bounce is a few days away. Russell, we are a little bit in the rally mode. Probably, I won't say it the strongest. I'll just say it the least weak, if we could say it that way. All right, and the VIX, it's kind of rallying here, but the stochastics RSI is giving me every indication it wants to go lower, but we have to see price do it. All right, so what I'm going to do is I'll pull that over to the side, and I'm going to bring out TC2000. I've got a few charts marked up, and we're going to go over, these are the basically the earnings trades that we were watching. There weren't a lot of them. There weren't even a lot of really good ones, but we did have a couple that we could have played. Cooper Tire. One of the things I always check is to see which ones have high short interest, and if they have a gap or move against the most recent trend. Let me get a good color here. And the most recent trend was down and then flat. So anything that would be gapping above this 26 to 2650 area was prime real estate for a rally, given to what we saw here and the fact that we have high short interest. All right, it gapped up at that 2650 and ran quite quickly. Let's take the 2 minute out of the box mode. All right, now the 2 minute, and that's why I normally start. It was a 2 minute. Unfortunately, I was messing around. What was the stock I was messing with? Could have been Dan. Yeah, I think I was in Dan. Yeah, we'll go over that. All right, so in the first 2 minutes, we got basically up to 28, and we went sideways for quite some time. The long would have been somewhere around this 28.10-ish or 15, and the stop would be under, definitely under the volatility stop, and then some. Now, if you put it at the volatility stop, on that 2 minute chart, you would have been taken out. But if we go look at a 5 minute chart, That's where I normally set the vol stop. On a 5 minute chart, you would have been taken out because your first one would have been down here, and then as soon as we actually got in, it would have been up here around 27, 26. You're looking at almost $1. So I'm going to round it off and call it $1. So you're risking $1. You're going to want at least $1 for the first move and $2 for the second move if you can get it. With the markets as weak as they were, kind of feeble at best, I'm probably going to take 1-to-1, especially if it's a buck move, instead of looking for more if it was, you know, a smaller percentage. All right, so did it move? Yes, it moved up, and if you look over here, the target one was hit right here, approximately. What was that time? 10:20, with a long either here at 9:45. Again, we're on a what? It says a 5 minute chart. Yeah, on a 5 minute chart, there we were 9:45. Or if you got in on the later one here around 10. Okay. Either way, you're in about 30 to 45 minutes before you hit the first target, and then it kind of gradually from there. I use once I get in and it starts moving up, I use the volatility stop trailing to help me come up with a trailing stop or where to put it. Well, as soon as we got up here a little bit and get to target one, I'm looking at, say the first entry came down and we didn't move our target, our stop. We probably can't move our stop up until we get to this level right in here. Okay. So more than likely when you get to that level right there is when you can move the stop. Now, the vol stop says you could be there. Is it underneath a supportable place? Yes, probably right there would be a decent stop. Just under 28. So you're probably you're not locking in a guaranteed profit yet. So then it gets to target one. We probably use the ATR stop, but once I get up into here, I'm probably moving my stop up to 28.45. It's just under 28.5. So we lock in at least a profitable trade, assuming we don't go higher. Well, we hit target one. Then once I hit target one, I'm going to give it a little bit more room and flexibility. At least that's the game plan. That is harder to do for somebody who's as impatient as me, and that's hard to do for me since I am one of those. Francis, I love it, Francis. Yeah, I realized afterwards there was something on it, but I haven't posted Friday yet. Anyway, let's see, where was I? I thought it was funny too because I knew I didn't really say anything. We don't say anything that we don't say in front of you guys. So we average to range, trying to give it room. My problem is not only am I not patient, but I don't like giving back any money I used to have. So therefore, I tend to want to have tighter stops, and that's not conducive to letting stocks run. Not at all. So that's why I try to use a mechanical system here, like the average to range or something like that, and it takes out the subjectivity. You can always hope, right, Francis? Juicy tidbits. Well, anyway, we got taken out would have got taken out here on the trailing stop, and I believe that was what, $3.07 versus 28.07, so about $2. So $1 for the front, $2 for the back end. Because you have 81.73. You have about 85 cents. Let's go look at the share sizing chart. Bringing it up now. And we would obviously do this in beforehand. So you got 88 cents. So somewhere around 90. If you want to risk $200, you can buy 200 shares. If you want to risk somewhere around 250-ish or so, I could go down here about 90, go here to 270, and it says I can buy 300 shares. So you get 150 on the first, and you get double 300 on the second, so you get 450. That wouldn't be too bad. And even if you only did 200 shares, you got 100 and 200 for 3. So the whole idea is to set an entry level, look at the stop level, follow your share sizing risk profile chart, and where would targets be? Well, I was watching this and I said 28.25 was kind of where it gapped up to. Let's say the 5-minute opening range. So that's kind of where it stabilized at 28 to 28 and a quarter. It could not get above it for a while. Then it got over it. And where are your next targets going to be? Your next targets are going to be somewhere in and around 30 to 30.50. Well, I said 30.75 based upon the fact that we usually overshoot and get up into round numbers, in this case 0.75. And that's kind of where it's gotten to today. It really can't get over 30.75, and it might over time. And this would be one where if you were a swing trader, you'd watch for a move to a 45-degree runner. But as a day trader, it ran up to resistance and paused. So it gapped up to here at a minor resistance around 27. Ran to about 28 to 28 and a quarter, and it kind of wobbled between there and 27.50. And then it started to rally. You have to be patient. You have to look at the dailies, even though you're trading intraday, because that'll give you an idea of how far can it go. And that's how you are able to ride this puppy up. Now, this got up to 29 for that first wobble. Let's go to an hourly chart. And 29. Do we see anything in 29s? You betcha. Let's do an oval here. This area right in here. Okay, let's edit it. Let's take the color. Edit. Let's set that as default. So for now. So that area right in there, not surprising that we ran into a little bit of resistance at that on that 5-minute chart around $29. Then it kind of got through it. Now where's it going to go? Goes up to that next level, which we highlighted as right in here, around 30.80, 30.75. I think that's where it's going to stay. It'll probably not get there above today. All right. Any questions on Cooper Tire and the trade and how you look for where it's gapping to, where your targets are, and how short interest play comes to play? Booz Allen. Let's also look at a 5-minute chart. Well, Booz Allen went up here to just about $50. And then afterwards it broke out. The rate that is not true. Okay. On a 2-minute chart, this thing went up and it went up to about $50 and then pulled back. And what I'm trying to say here is that usually my rule of thumb is that if we get a move up to here and a pullback, usually the rally will have the first target to go back up to retest the high of the day. Well, it moved from 47 to 50. That's only $3. Can I expect it to possibly move up? Yes. But it kind of ran out of steam early, and it could really only get about 49.50. Now, that's where I'm trying to say that the rally failed to reach the opening range high. And this would have been one that if you tried to play for the retest and it just struggles here, you might want to continue to raise your stop and probably be out around 49.20, almost where you went long. So the idea is watch the opening range and see if it can actually get back up there. In this case, we couldn't rally. We got close. We got 49.50, but we couldn't get up all the way. Bloomin had the 5-minute opening range. It went up here. It pulled back to the bottom part, which is not necessarily all that bullish. But let's excuse me. Let's do our little quadrant lines here. And if I do the old quad, all right, there's the quadrant lines. Now let's do this again. Delete it. Quads. Take it from there. All right. And what we're trying to look at is to try to say, how deep is this retracement? Well, that retracement is greater than 50%. That's telling me that at best, with that basically 2/3 here, that we're going to, at best, retest the high of the day. Well, can I take that from 1975-ish to 2050-ish? I don't know that it's there. That's why I passed on it. But what we're doing is we're also observing that we went up, we came back, deep retracement, and we've got what could either be a rally or a bear flag. Well, it basically stopped out and tapped out at 20. So this one right here had if you went long above this, expected it to go high, you use your average trailing stop, the ATR stop, vol stop, and it would have kept you pretty close to even. So you managed to watch that the J hook pattern that should develop and take you back up there, it ran out of steam. You could tell that from the stochastics RSI and from the balance of power. So those are both indicating that we're running out of energy. And sure enough, it came down and tagged it for a push, basically. All right. Let's look at C-Day. C-Day did very, very similar to Booz Allen, failing to reach opening range high. It got up fairly close. It got over 38, but then really couldn't hold it. And you can see from stochastics RSI and the balance of power that it's really struggling to get there. We've already covered CTB. Let's look at Dan. Now, I was actually in Dan on a 2-minute chart. All right. So I went long Dan here a little over $18. At $18.50, I saw that it was kind of running out of steam. I was getting a lot of, I was watching the matrix. I saw a lot of sellers coming in at $18.50. So I took 47, I think is what I did. And sure enough, they pushed it back. and I got out to a little bit above break even because I just, even though the balance of power was good, the stochastics RSI was pulling back. I really was nervous about the markets, and this one in particular. Well, sure enough, it really, if you'd have used a 5-minute opening range, Steve, you never would have been in this one, and you'd never have taken any heat. Well, I also wouldn't have made $50 to $75, but that's, neither here nor there. I probably shouldn't have been in there. Well, Dana didn't run. In fact, Dana ran to the bottom side, and if you use a 5-minute opening range, that if it gets over the high of this high, which was 1841, gets you up to about 1850, and probably another 5 or 10 cents the other side. So if you didn't get up here around 1860 to 1865, you wouldn't have been in. And you'd have said, okay, nice to see you, wouldn't want to be you. All right, let's look at another one out there that did pretty well. This is a nice power move. Unfortunately, it only has about average daily of about 315,000 shares. You say, well, but it had good enough volume today. That's true. The problem with that is that the volume there was not in the millions. It was, up there above average. But the problem is its spreads were pretty high too. Because usually, normally, stocks that have low volume, once they get to move on say something like this, especially with the way it's moving, what you're going to do is you're going to get the spreads pretty high. Excuse me, I'm going to sneeze. I apologize. All right, which is why MCY did not come up on our scans, is because the average daily volume was too low, because sometimes they work, sometimes you want to be in them, and in this case, 5-minute opening range high, you can be about 53 or so, it ran to 57. Could you have been in there? Yes. Could it have worked? Yes. Could I have guaranteed that it would work? No. Did I really like the wide spreads? No. I would have been long over 53, and I would have had to have a stop probably below 52. That's a little bit too much for me. But I wanted to say that it does have a power move. Power move basically following the 3 and the 8 exponentials. And eventually, after it rolls over a little bit, it'll get up down to the 17. All right, let's look at Weatherford. Weatherford's another stock. In this case, it is a $2 stock. It does trade quite well as far as volume goes. If you use a 5-minute opening range, or even a 2-minute, I believe, you would not have been in. It would have kept you out and kept you safe from harm. That's why I like to use the opening range, because it gives me a good indication that this is either going to run or it's not going to run. Yandex, 5-minute opening range. Well, it would not have kept you out, because the 5-minute opening range was 28.31. Actually, it was probably around this 28.50 or so, and it ran up a little bit. Let's see, if you have your stop here at 28.40, and you have your entry 28.40, and your stop about 28, you're talking about 40 cents. 40 cents on that single 1.0. The 28.75 to 28.80, that's 1.0. If you could not have gotten in, I don't think you would have probably been able to tag 1.0 to 2.0 in the risk, 2 times risk. But what it would have done is said once you came back and you did yourself a little bit of a retracement here, so you went up, you get yourself long, your stop is down here, it comes close and almost gets your stop, and it goes back up, and you said, glory, hallelujah, thank you very much. It's going to go back up to the opening range high and test and then break out. Well, not exactly. It got up to these levels here around 28.5 once, twice, and it basically third time. It just can't get through 28.50. I wouldn't have been there in a day trade because once it came here, failed to go higher, I'm probably not giving him more than 28 and a quarter. So the 5-minute opening range failure would get you to say that this was, let you evaluate that this one's not going to run like the scalded dog, like Cooper Tire, and you might want to think about exiting stage right. All right, let's just look at a couple that were not on our radar scope at the beginning of the day, maybe. Bank of America. Someone posted Bank of America and stock twits that I posted here and put on the list and went, hey, this thing did a little intraday J hook. Could have possibly gone long around the 2680 point or something like that, or could have waited for the breakout. Okay, if you wait for the breakout here, you're talking about $27 or so, plus or minus. And did it follow through? Not exactly. And there lies the judgment. You had this little area of a J hook, but it did follow through to retest the opening range high at 27, but you probably only make 20 or 30 cents. Well, how big would the stop be if you went long here? And your stop's got to be underneath here. So you're looking at 26.90 or so, and you're looking at 26.75. You're only talking about 15 cents. So if I'm looking at 15 cents, all right, and I want to see how much I want to risk. Let's go back to our share sizing again. I'm only risking 15 cents, so this is the line that I'm on. For 100, I can buy 600 to 700 shares. Now, is this? Then I've got to look and say, whoa! Does this thing trade enough for me to be able to do it? Oh, you betcha. It says 77 million now on an earnings day. It's probably going to be even more than that. So, yeah, I could do that. Whoops. I didn't mean to grab that one. For me to grab is a sizing chart. So I could probably buy 6, 7, 800 shares, maybe even 1,000 or so. If I buy 1,000, if I bought 10 shares, I'd be risking $1.50. Buy 100 shares, it'd be $15. For 1,000 shares, it'd be smacking $150. All right. Depending on where I go long, do I go long here? Do I go long there? And then where do I take the profit? And I do apologize about the noise in the background. I'm going to pause for a second.